Are you looking to purchase an investment property but don't know where to begin? Let's talk about a DSCR loan. Hey everyone, Aaron Page here. Appreciate you watching today. Let's go ahead and dive into a DSCR loan and what it is. So here's the situation. You want to purchase residential real estate and you're looking anywhere from 1 to 8 unit properties, but you're stuck. You're not sure which lender to approach. You're not sure who's going to have the best rates, the best fees, the best everything when it comes to buying a multi-unit property or just a single family investment. Or maybe you're ready to expand, but you don't have traditional employment. Well, a DSCR loan is a no income loan. We don't verify your personal income. We just look for a couple things, and it's to make sure, will the property cover its own rents or payment, essentially? So DSCR stands for debt service coverage ratio, meaning is it a 1-to-1 ratio? So let's give an example. Let's say you're looking for a single family rental. It's just a 3-bed, 2-bath, cookie cutter home, and the proposed monthly payment on that's going to be $2,000. The way this loan works is, will the rents in the market locally support a $2,000 a month rent payment to offset the mortgage payment? Do you have a 1-to-1 ratio? If the answer to that is yes, then it meets the 1-to-1 DSCR ratio requirements and the loan is good to go. No income verification. The only assets we verify are that you have enough money for down payment and that you have any applicable reserves. So if you own other properties, you have to have reserves for those properties in most cases. So this DSCR product solves a lot of problems for a lot of people. Either they go to the bank, they try to buy an investment property and they get told their debt to income ratio doesn't work, they're over leveraged, or they just don't make enough money to do it. The DSCR loan doesn't care about that. It cares about, does the property service itself? Now, there are situations where, let's say the proposed housing payment is $2,000, but the market rents are only $1,500. You can actually do that even though you're below a 1-to-1 ratio. But the thing to note here, reserves are going to be required, they're going to be higher, and the interest rate is going to be different. If the property doesn't service itself as far as a 1-to-1 ratio, and let's say a 0.75 to 1, the interest rate is going to be worse off than it is if it's a 1-to-1. Here's some high-level important details about a DSCR loan. Loan amounts can actually go up to $4 million. A DSCR loan is exclusively for investment properties. This cannot be for your primary home, your second home, your vacation home, whatever. It has to be a true and straight up investment. You can use this loan program for purchases, rate and term refinances to get out of hard money, or cash out refinances if you want to access equity in a rental property. Again, no personal income is verified on this. This DSCR loan focuses strictly on the property covering itself. The other benefit to these DSCR loans is if you qualify traditionally and you're buying rental properties, Fannie Mae and Freddie Mac won't let you have more than 10 financed properties at a time. With a DSCR loan, there's no cap because technically it's a business purpose loan or a commercial loan, so it doesn't fall under that same restriction. With a DSCR loan, you could own up to 100 properties and nobody's going to care. With a DSCR loan, you can do a fixed rate option or you can do an adjustable rate as well, but I always advise against adjustable rates unless the market really is showing that that's the right play. The reserves in most cases are as low as 3 months per owned property. So if you have 3 months for your primary residence and you have 5 additional investments, you could be looking at up to 18 months total of reserves needed, which is money in the bank or liquid assets or retirement that you could access in reserves if you fall on hard times. You're required at minimum to put 15% down on these for a purchase. And when it comes to refinances and cash out refinances, 80% to 75% max LTV. A DSCR loan is eligible to be used for short-term and long-term rentals. So your Airbnbs and Vrbo properties are good to go on this as well. The last point, and probably one of the most important, is the LLCs are able to hold these properties. So with a DSCR loan, you can close into an LLC, which means this will never touch your personal credit because technically it's a business or a commercial loan. You can close into an LLC, an S Corp, a C Corp, or whatever you can think of. If you have it, you can close into it. I will say this though, most investors and lenders prefer an LLC or an S Corp. If you want to go a different route, you need to get a lot of approvals, more paperwork. Most people close into an LLC. That's a really high-level overview of a DSCR loan. If you're an investor and ready to build your portfolio, this is one of the best financing tools out there for you without having to show a lot of income on paper. Get the cash together and start acquiring properties. DSCR loans are the way to get the job done. I want to thank you guys for watching. My name is Aaron Page. Make sure you guys like and subscribe to the channel. We'll see you on the next one.